Hello traders, Gary Wagner here, just about 11:30 in Honolulu, 5:30 in New York. It is Friday. Happy Aloha Friday, as we say on the islands, October 19th, 2018, and this is the Daily Report for Gold and Silver, our weekend review, and what an interesting way to end the week in terms of weekly gains. Now, gold futures did close in essence unchanged. Our current print is $1,230 per ounce with a net change of down 10 cents on the day. However, it closed up approximately $8 this week, and now for the third consecutive week, we are seeing higher pricing in gold. Silver gained about 0.33% or just under 5 cents and is currently fixed at $14.65. Palladium scored about 0.7% gain and has been moving up the ladder, now at $1,072 per ounce. And platinum also scored gains on the day of about 0.25% at $833.80. Now, that all in light with some tailwinds today provided by a lower U.S. dollar. Now, it is still above 95 at 95.39, but it is down about 0.25% today. Mixed bag in U.S. equities with a rise in the Dow Jones Industrial Average of about 0.25%, 65 points at 25,444. However, the Standard & Poor's closed fractionally lower at 27.67, and the composite lost about 0.5% in trading today and closed at 74.49.03. Traders, the first chart that I do want to look at on today's show is a weekly candlestick chart of gold. And on this chart, we can easily see that we have had 3 consecutive weeks in which gold has opened and then closed higher on the week. Of course, the way we look at a weekly chart is that the bottom of this rectangle, when it is green, represents the opening price on Monday, and the closing price on Friday is signaled by the top of a rectangular box when you have an up week. And as such, we have seen 3 weeks of consistent gains, an $8 gain this week, which is small, but nonetheless respectable. I think the most important tell that we can take off of this chart is the fact that we had a solid trading week above the former level of resistance, which we said is at 12.17. That, of course, is the 0.618% retracement. And on Thursday of last week, we had a dynamic move above that and a close and finish above that last Friday. So traders, we are currently long December gold. We are long at 1228.40, I believe. And we have seen this market effectively form, I believe, a base above the former level of resistance, which I now believe is support at $1,217. As we've spoken about before, the 0.618% retracement is a key level. We can see that back in July and August that this was a level that was highly indicative of a support level. We can see that right here. Of course, we had a fall from grace. I believe this was August 10th, in which the market broke below that and actually traded not only to the 0.78% retracement, but even below that when the market traded as low as 1267. It quickly recovered, but then from that point, you can see that on a number of occasions, the market on an intraday basis challenged 1217, but did not break above that. That, of course, all changes we spoke about on Thursday of last week, and we can see that as defined by this large candlestick right here, and that was very significant. It was significant for 2 reasons on a technical basis. The first reason is that it took us above this shorter term 50-day moving average here. It also took us above the $1,200 psychological key level of support or resistance, but then most importantly, traded above the 0.618% retracement area. That's this candle here. And this week we had solid performance as it traded above that consistently all throughout the week. Now, at the same time, we can see that when the market did in fact now trade above it. We are now labeling this as our support level, but we have a new level of resistance now. I don't think it will be a hard level to take out, but the blue line represents the 100-day moving average, and we can see that consistently for every trading day this week, the market traded into and above the 100-day moving average. However, on each and every occurrence of that, this week we closed below that. And so that's telling me that there is real resistance at this particular price point. We need to break above the 100-day moving average. And if in fact we do, as I believe we certainly could, our next real level of resistance, and what I'm labeling as the next strong level of resistance, really doesn't come in till about 1246 to 1250. And so that a solid break and a close above this at the beginning of next week, to me, would signal a move towards these upper levels at 1250. Of course, a break above $1,250 would be extremely bullish and could in fact signal a move to challenge the longer standing 200-day moving average. Traders, it is for that reason that I am recommending that you maintain your current long position in December gold at 1228.40. Maintain your current stop. Now the stop is rather loose because it comes in just below the 50-day moving average, and we will look to move that up just below the 0.618% retracement early next week. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you on Monday for the next daily update and review. Have a great weekend. Bye-bye.